Diversification essentially means to spread your risk across different types of cryptocurrencies and projects to minimize the impact of a single investment failing. Diversification is a key strategy when it comes to managing risk in any investment portfolio, and this is especially true in the world of cryptocurrencies. With the crypto market known for its volatility, spreading your investments across multiple assets can help protect your portfolio from significant losses. One way to diversify your crypto portfolio is to invest in a variety of different coins and tokens. For example, rather than putting all of your money into Bitcoin, you could also invest in Ethereum, Litecoin, and other leading cryptocurrencies. This can help to spread your risk across different assets and reduce the impact of any one coin's performance on your overall portfolio. Another alternative is to have a variety of strategies. As I mentioned earlier, you can buy and hold different coins, and you can also use a number of different strategies. For example, you can make a strategy that trades based on trend following indicators that is great when the market is in an uptrend. Additionally, you can also have a strategy that is great at scalping when Bitcoin is stable. Lastly, you can have a strategy that trades futures and shorts Bitcoin. Doing this, you will be able to diversify and profit in any market scenario. Another way to diversify in the crypto market space is to invest in different types of projects. Some investors prefer to focus on established high market cap coins like Bitcoin and Ethereum, while others may choose to invest in newer, more speculative projects that have potential for higher returns. By diversifying in this way, you can potentially capture a wider range of returns and reduce your risk. It is also worth noting that diversification doesn't just mean spreading your investment across different assets. It also means spreading your investments over different platforms, exchanges, and wallets in order to minimize the risk of losing access to your assets. This also helps in case of an exchange collapsing, like what happened to FTX recently. In conclusion, diversification is a crucial strategy in the crypto market as it can help to spread risk and protect your portfolio from significant losses. By investing in a variety of different coins and tokens, as well as different types of projects and strategies, you can potentially capture a wider range of returns and reduce your risk.